Or just run.
You're like you're.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. The What and the Why is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a casual conversation of the news and the markets.
You know what I'm actually looking at is I think Bullard's comments today, Federal Reserve Bank President James Bullard, came early this morning. So it might have been overnight overseas. I don't really know where he was speaking. But he said that the Fed doesn't need to raise interest rates further because the policy rate has reached its neutral setting and inflation expectations are at or below target. Now here's the quote. This suggests that it is not necessary to change the policy rate to keep inflation at target. Oh, here it is. Bullard speaks to Springfield Area Chamber of Commerce in Springfield, Missouri. By keeping the policy rate steady, the FOMC may be able to appropriately recenter inflation expectations at the target outcome for the next several years. The yield curve could invert later this year or early next year if the committee continues to increase the policy rate and longer-term yields do not move higher. It is unnecessary to press policy rate normalization to the point of inverting the yield curve, since inflation and inflation expectations are either at or below target. I thought that was super interesting to have that happen now because the yield curve did flatten to its lowest cycle levels, and by cycle levels I mean basically since the financial crisis, since it started steepening, since rates started rising. So 26 basis points, I think, on the 2s to 10s, which is pretty low. This is the first. Now, I don't believe Bullard is a voting member any longer. I'm just going to check that while we're talking. So he can speak much more freely, and it won't necessarily seem like he has any sort of influence. So but I should double check that before. Let's see, voting members of the FOMC. Excuse me. 2018 FOMC voting members cheat sheet, as compiled by babypips.com, to give credit where credit is due. Hold on.
You know, baby pips should have grown up by now.
I know, they just stayed a baby. Let's see. Okay, all right, now I'm gonna criticize this. Okay, here it is. Bullard is not a voting member currently.
It's interesting, its timing also, because it's before what's the odds on the June meeting rate hike?
Very low, I believe, because hang on. Many members of his will still get to sit at the cool table, not get to vote. Okay, so Bullard sits at the table while the conversations are going on, but is not a voting member because he's a Fed president. So he's at the FOMC meetings, but he doesn't vote. Whether or not he gets to voice his opinion, I think it is up to Powell. The June meeting. Now, this is a good thing for people to know. CME Fed Watch tool. I've talked about this before. You can just Google that. It takes you and it gives you essentially the current odds based off of Fed fund futures, which would be what the market believes is going to happen, in percentage. So if this thing would ever load. Let's see. Target rate probabilities for 13 June. Current target rate is 150 to 175 basis points. It is 100% priced in that they're going in June.
Priced in.
Yeah.
That's what I was wondering.
The probabilities are 100% currently.
And that can shift, but it
currently it can't go higher. It can't shift higher. It could shift to a higher rate spectrum, but not a higher probability. So 25 basis point hike is currently priced in at 100%.
So you're saying that the only risk is downside risk? The odds.
Correct.
All right, so
I don't actually believe the Fed would like to see this. I don't think they like that. Whatever. They can't always get what you want.
But can you get what you need?
Oftentimes, yes.
If you can't get what you want. That should be a song lyric or something.
Someone should write that.
Yeah, that'd be a good one. I'm surprised Stafford didn't chime in on that one.
I don't want to pay the royalties. Stop right there with those lyrics.
We didn't sing it.
I know. We were close. We were right at the edge.
Have you been paying attention to the crypto carnage? The crypto carnage.
I have not. Tell me what's going on.
Bitcoin back down to 85.27. Big sell-off today. Well, in the scheme of things, it's only back to where it was trading back on the 20th of April. But you know, when anything like this happens, all the headlines are crypto carnage. So,
oh, jeez.
I mean, we had the cryptocurrency upbit raided by Korean authorities last night.
Mm-hmm.
So that's never a positive thing. It's like the exchange hosts about 1.6 billion of cryptocurrency trades in the past 24 hours, making it the biggest in Korea and the fourth largest in the world. So they got raided. They're supposedly cooperating with authorities, but South Korea has been cracking down on the cryptocurrency industry to combat excessive speculation and illegal activities such as money laundering. We talked about last week where like Hong Kong came out with their report saying there's not much money laundering going on in here. It's not with the bigger things, I think. So we'll have to see if South Korea is finding something else. But, that's one of the things that people are speculating triggered this massive downside move. Did you like my stress there?
I did. That was very emotional for you.
Yes, I've been practicing. But we're trading against the rotation zone on the 4 hour, and it looks like we might get the first cross the rotation zone on a daily. So that's in hands-off mode, waiting for high probability bottoming patterns.
There you go.
This didn't turn it around either. Now we've had two stories, two headlines. Recode came out and said Facebook is set to build a team dedicated to blockchain, and then this morning from Cheddar,
the dumbest name.
Facebook is said to mull creating own cryptocurrency.
There you go.
So that obviously didn't turn it around.
And cryptocurrency heads are going to mull doing their own.
What would be the Facebook cryptocurrency for? What does Facebook need a cryptocurrency for? Is that why they banned cryptocurrency ads? Because they're going to have their own cryptocurrency? Then that's the only one they're going to advertise on their site?
I don't know.
I wonder, did Facebook rally on its cryptocurrency news from Cheddar? Yes, it is rallying big. It's rallying bigly.
Bigly. Today's the first day for Amazon Prime members to pay more.
Is it?
Yep.
But, that's not going to hit me for a while.
They said that about half the customers, just under half, get hit today, and then the rest get hit by June 6th or June 16th. I forget which one.
But what if you already just renewed a little bit ago?
They are going to hit you, but just
they are?
Yeah, just not yet.
Oh, Amazon trading 1608 highs of 1638 a couple weeks ago, so it's approaching those highs.
Yeah, it's only about 2% off of its all-time highs. It got hit after they announced that, and then just basically blew earnings out of the water and quickly recovered. But there was a study by Atherton Research. I shouldn't call it a study. It was a poll of 1,000 Prime members, and 59% of them said they will not renew because of this new price hike. And I don't believe them one bit. Because I think it's going to be less than 20%. Because one of the things I think is cool, not cool, but smart about what they did was they made it an annual membership, right? So once it comes through, people will be like, nah, it's already charged. I'll just leave it. But I'm mad. And nobody's going to sit there and realize that Amazon ships about 100 million products free 2 to 3 days without a Prime membership. So I think the people that pay Prime appreciate the digital aspect of it as much as anything. And that loyalty to just go to your Amazon account and order something you've ordered before, I think it's way too strong. Now, Walmart and Target squarely aiming at them. What's Walmart doing? I'm going to pull up a Walmart chart. They have that. Have you guys seen that commercial for Walmart?
Which
where
one?
They talk about free 2-day shipping, and then they do like a little winky face, and they go, and there's no fee for that, by the way.
I have not seen that commercial.
Yeah, and they're doing the thing like that commercial has them with like these really cool Walmart boxes with kind of that Starburst character that they have, like their little Starburst logo. You know what I'm talking about? That Walmart has on the boxes, like they're trying to mimic, like you're happy when you see the box at your front door, kind of a thing.
Mm-hmm. You know what's funny? Why the dogs are barking?
Why?
Because I just got the delivery from Walmart today. That's why they were barking in the beginning, because the Walmart box just got delivered.
And I think one of the things that people are going to discover, I hope, is that, I don't care, is that they, Walmart's cheaper on a lot of these things, on a lot of the products that people order. Not all of them, but on a lot of them, Walmart's already cheaper. So if you're willing to wait the 2 days, oftentimes Walmart's the better option.
Did you see, Bob, that ICE, the Intercontinental Exchange, the people who own the NYSE, they are this is from the New York Times, they're citing emails and documents as well as 4 anonymous sources that ICE is planning to offer traders contracts that eventually result in customers owning cryptocurrencies.
Wow. Deliverable cryptos?
Yeah. So ICE, quote, has had conversations with other financial institutions about setting up a new operation through which banks can buy a contract known as a swap that will end with the customer owning Bitcoin the next day with the backing and security of the exchange.
An exchange-traded Bitcoin swap.
Yep.
Fun stuff. Just gets more and more fun out there.
Yes. And we had Warren Buffett unloading on Bitcoin, calling it rat poison. Bill Gates was on CNBC this week. Trading Bitcoin was if you're trading Bitcoin, you are the greater fool. And he would short it if there was an easy way to do it. Well,
there is an easy way.
There is an easy way to do it, dude.
It's like he's full of crap. There is an easy way to do it.
Yeah, it's called the futures contract, and he's wealthy enough to trade it.
Yeah, he could trade tons of them. He could move the market.
If he really wanted to short it.
Bill Gates is dumb.
He's dumb.
Bill Gates is dumb.
And Warren Buffett smells.
Warren Buffett is old.
Oh boy, yeah. They and also Charlie Munger.
Love Charlie.
Charlie claims Bitcoins are artificial gold.
Talk about
a clever computer science trick that doesn't mean people should buy into it. So that's our and then I thought this was sort of ironic. Bitcoin goes physical. Swiss startup launches pilot sale of BTC banknotes. So Tangem, a startup operating in Switzerland and Singapore, has launched a pilot sale of physical notes of Bitcoin. So you can buy these 2 different notes. They have denominations of 0.01 Bitcoin and 0.05 Bitcoin. And you actually carry around your little physical note, and it allows you to pay for things with Bitcoin. So you've actually taken something that's like not physical and actually tried to make it physical. Isn't that the opposite of the purpose of Bitcoin?
Yeah, I mean, these guys, obviously, you can't call Bill Gates stupid. But he's stupid. These guys just don't grasp what people are why people are into the idea of these particular, let's just say this particular technology. What Charlie Munger says, it's artificial gold, it's another computer trick. It's like, of course you would say that. I mean, Bill Gates the other day, I'm sorry, not Bill Gates, Warren Buffett in an interview the other day said, I don't buy stocks, I buy companies. He goes, so I'm buying a business, and it's like, okay, I understand that. That's why, like, when he buys Apple, he increased his stake in Apple. He's now the largest individual shareholder that reports in Apple, outside of the internal shareholders, obviously. He says he's not buying. He doesn't look at what the stock is doing because he wants to own the business. So they're just different. They're of a different mold. It's like somebody saying, Indian food is terrible. Well, yeah, because you don't like this kind of thing. It's fine.
Well, did you see?
I like it.
We might as well just rename the podcast the Crypto and Tesla podcast.
I know.
Or the Crypto and Elon podcast. Because did you see that Elon got into it? Warren Buffett last week was talking about moat companies and about how there's a moat, like candy companies have a moat around it and everything. The whole concept of moats. But
why don't you tell everybody else what it is?
I mean, there's a high barrier to entry. If you have a moat around it, there's all right, there's not really a moat around a cryptocurrency because I could go out and start my coin tomorrow. So there's no
great
moat.
Example of a sector that has a moat is like package delivery, transports. Very hard to get into because it's extremely expensive and you'll have no clients to start, et cetera.
Right. You got to buy planes, you got to buy trucks, you got to buy all this stuff, huge startup costs.
Yeah.
Then you have to.
Moat construction is very expensive. You need the diggers, you need to survey land, right?
You need castles.
Yeah, you need castles. If you want to make moats, there's a moat entry.
We have to build the castles first before you can have your moat company. That's the biggest problem with moats these days. There's not enough castles.
And nobody knows what a moat is. I thought it was a small furry animal.
Now we're in the morning show territory.
No, that morning show. We got a morning zoo going again.
So Elon then came back on Twitter this last weekend saying maybe he should start a candy company. He started going down the whole Willy Wonka path. He was like having a Twitter fight or a virtual Twitter fight with Warren Buffett, who doesn't really respond to anything on Twitter. So Elon was having a meltdown. And then did you see the biggest short squeeze ever? All the shorts are going to get burned on the biggest short squeeze ever?
Didn't see it.
Oh, that was fantastic. He's mad at because the short interest in Tesla went to the highest level ever. He then said, short burn of the century coming soon. Flamethrower should arrive just in time. Then he followed it up with, quote, looks like sooner than expected. The sheer magnitude of short carnage will be unreal. If you're short, I suggest tiptoeing quietly to the exit. Then on Monday afternoon, he decided to go out again and say, revealing that he bought $9.85 million worth of Tesla shares on Monday. So this was his biggest purchase since March 2017. He was trying, and he did it pre-market. He didn't even get good price because he did it when it was the most illiquid time. He was actually trying to trigger a short squeeze in Tesla himself.
All this guy has to do is build the darn cars like he promised.
Yeah, if you want to kill the shorts in Tesla, actually produce what you said you were going to produce and don't run out of money. So, I mean, that's really, he's trying to artificially. So first off, if you're trying to do a short squeeze, don't publicly announce it on Twitter that you're going to try to manipulate your own stock pre-market. The guy's gone. He's really lost it.
I mean, he does it, he's like, just like the flamethrower, for example. Right? The Boring Company's flamethrower.
Yeah.
I mean, why? Now, he's kind of a crazy genius because he sold $10 million worth of flamethrowers in 4 days. He sold out. And it's like, I should find it. I should have found it prior to recording, but I saw an article from Wired, the UK version of Wired, where they were asking people why they bought them. And one guy said, it's just cool. I want to roast marshmallows with it. So he paid $500 for a flamethrower because he thinks it'd be fun to roast marshmallows with his friends with this flamethrower.
And
I don't know
it's not even a flamethrower, though. It's one of those things to put tar on roofs, modified with a plastic around it.
This guy's gonna roast marshmallows with it.
Yeah. Well. Oh, did you see? Speaking of his boring company, he just a couple days ago, Elon Musk outlines plan to get into brick making business.
I love him. I'm in love with the guy. So is this
quote, the boring company will be using dirt from tunnel digging to create bricks for low-cost housing.
I don't know if we're recording this on Friday, just around lunchtime, and you may not get to the podcast by the time I speak, but I'm speaking on Saturday in Chicago at the Westin at 900 North Michigan. It's a free event from E-Trade. So if we're out too late for you to read this or to hear this, check out E-Trade's website because there's a bunch of them that I'm speaking at in the next 6 months in different cities. Having said that, the one I was at last week, the resort we were at in Scottsdale where I was speaking, they were doing Tesla test drives, and they had a Model X and a Model S. And I will say that driving that Model X, I mean, it's an egg. It is really ugly. And those crazy doors on the back are crazy, but they're super cool. And the ride was awesome, and driving it was awesome, and the interior was awesome. And it just made me think he's just crazy enough to fully believe in his heart that there's no reason he can't make this work. But I'm telling you, I get why people are emotional about him. I would never buy one. I mean, the Model S, for that money, I'd rather have a Panorama or something like that, something from a car maker with some history and some service.
And if you want the electric version, the Porsche is coming out with it.
Yeah, I mean, that's when I think he's got a problem more than anything. But, I mean, I get it. It was cool. It's just the companies who have the moats, they don't need to. Elon's can't guard his moat. There's no moat.
There's no moat around brick digging too. So he's planning on making these bricks from his excavated muck from the boring company.
Oh my God!
Insane. This is interesting. One of the guys who lectures at the University of California, Los Angeles, associate director of UCLA's Institute of Transportation Studies, said Musk's tweet, quote, assumes that housing costs are driven by construction materials, and particularly construction materials that can be replaced by bricks. That's not the case. At least in California, the only state where a boring company has started digging a ton of land and labor drive prices more than anything else. So you can make all the free bricks you want.
Yeah.
I don't know if either of you saw, this came out yesterday from Panasonic, okay, who they're partners in the Gigafactory. Panasonic rattled by high maintenance partner Tesla. Where's the quote? Because when the Japanese company, when they come out with something like this, it gets vetted across. This is not just, they don't just tweet something out or come out with a press release. This gets vetted through Japanese companies very highly because they're very careful with what they say. The one the Panasonic executive said, they were talking about the conference call where he said these boring and boneheaded questions are not cool, and the Panasonic executive came out and said he's in no position to say something like that. Whereas there's some other interesting quotes. They're like reconsidering, because it's such high maintenance to be in with Tesla, they're actually reconsidering their investments moving forward with Tesla.
Wow.
Yeah, that's like huge. And they're actually looking to up their investments with Toyota. So that's pretty big.
Yeah.
Because they jointly put in $5 billion into the Gigafactory, but if they go some other direction, their plans now, they came out and said their plans are, quote, not solidified yet and nothing is set in stone. So they're now starting to get a little jittery in doing business with Tesla, which could cause Tesla major issues.
Yeah.
I'm starting to see something else out there. We're starting to get, remember, like Elon was always, he could do no wrong. He could say no wrong. He like walked on water.
Mm-hmm.
Well, now even a lot of the things are turning in, even like electric. You know, they've always been a huge Elon and Tesla fan. They even came out with an article this week. Tesla could have to offer computer retrofits to all Autopilot 2.0 and 2.5 cars by the end of the year.
Mm-hmm.
That was one of their articles saying, and then the thing was that could be major because that would essentially have to go over 120,000 vehicles with a computer retrofit.
Oh, crazy.
So they're coming, and what would that mean to the company? What would that mean to its money? And then, speaking of SpaceX, so we had NASA advisors say SpaceX rocket technology could put lives at risk. So they're talking about the way all the SpaceX rockets are fueled, and they have to be fueled at the last minute because they tried to solve a problem. All right, so when Elon and his team at SpaceX were looking to make their Falcon 9 rocket even more powerful, they came up with a creative idea: keep the propellant at super cold temperatures to shrink its size, allowing them to put more of it into the tanks. But the approach comes with a major risk. At those extreme temperatures, the propellant would need to be loaded just before takeoff. When astronauts are aboard, an accident or a spark during this maneuver, known as a load and go, could set off an explosion. So, you know, we've already seen a couple of these rockets explode. But they had just satellites on them. And now NASA's like, well, you can't really put people in this position because you blow up a satellite is bad enough, but you have people on your rocket and you have to load it at the last second. And if it blows, you've just blown all the people and any ancillary people helping those people right before launch. So they're even coming out like, it's sort of like pile on Elon at this point. So I think some things are turning, and what's really interesting is they're still trading like at what, the 50 million market cap or something?
Yeah.
Or 50 billion market cap. Volvo. You know Volvo, right?
I've heard of them.
Good car company, produces a fair amount of cars. They hired Geely.
Pretty innovative.
They are actually hiring a company to look for a possible stock offering. Guess what their estimated market cap would be?
I don't know.
Only 16 billion to 30 billion.
Wow.
So if they came out and how established are they? And again, they're coming out with their whole line of electric cars and everything else, but they trade at a third to a half of Tesla's market cap. Really? I find some of this just shocking. I mean, that's how overvalued Tesla is in my mind, because you have an established car company that's finally looking to IPO, and they could IPO at a third of Tesla's value, and they actually produce cars that don't catch fire, don't blow up, and don't drive into walls. Wow. So, yeah. So that's enough Tesla bashing segment. I'm still waiting for the Elon coin, though. I still want the Musk coin. I think he should jump on that while he can. That's his next way he's going to raise money for Tesla. Anything else in the economy segment?
No, it was a pretty weak data week. CPI came in lower than expected. Yields backed up a little bit. We talked a little bit about Bullard talking about how there was no inflation. I talked last week about interest rate normalization versus waiting for inflation to turn up, and that CPI helped drive stocks a little bit higher in order, just because, again, the Fed does not need to go to 4 rate hikes, and that's basically Bullard is saying they don't have to do any more at all. So there was that. Consumer confidence came out today, 3 ticks higher than expected, 98.8. It was expected at 98.5. Michigan sentiment is the smaller of the two consumer confidence measures. I would say the market looks at them pretty equally, but the Conference Board's consumer confidence surveys 5,000 households. University of Michigan consumer sentiment does a foam poll of 500 households, so it's a much smaller survey. But both of them are coming down but they're coming down off of record levels. University of Michigan was at a 14-year high. Consumer confidence from the Conference Board was at a 17-year high. So that's about it with that. The euro is still breaking down. It's up the last couple of days, but it went below 119 pretty substantially. There was a death cross in the euro.
No, not the death cross.
There was a death cross. Mike, if you didn't have a what, you could steal that. There's a death cross in the euro, which, if anyone who ever looked at that, they don't really work. But
that's why I don't know there's a death cross.
They're one of those things. So we went as low as 118.22 and change in the euro US dollar, which is a pretty good move. Dollar index is now pulling back and the euro is going up. And the dollar index has been pulling back since that CPI number came out, really. I mean, not dramatically. So yeah, that's about it. It was a pretty light data week.
Today's edition of The What and the Why is brought to you by MotiveWave Software. MotiveWave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. MotiveWave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann ratio analysis, but it's presented in a very easy-to-use way. MotiveWave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
I'm going to go into my why right now because it'll double as a crude oil segment this week because we pulled out of the Joint Comprehensive Plan of Action, the JCPA, otherwise known as the Iranian nuclear deal. It was expected that we would pull out of that. I was really happy this week because I wrote an article about it, and then our title of the article was Trump Pulls Out. Just made me laugh when I read that, when I wrote it. So oil prices were not really expected to spike as much as they did after the announcement because it was one of those buy the rumor, sell the fact. If anybody doesn't know why that happens, the markets anticipate an event. That's the buying of the rumor. And if that event comes out as expected, there's no more catalyst for it to go any higher. So profit taking comes out, and that's the sell the fact. And that did happen initially. Crude oil sold off into the announcement, sold off after the announcement, and then when President Trump started talking about the sanctions being reinstated within 6 months, and also what he called the harshest economic sanctions available would be placed on Iran. And he also made sort of a, you're either with us or you're with them comments toward the other countries still involved in the Iranian nuclear deal, at least by signature, they're still involved. Which, by the way, anybody who thinks the other countries are going to stay in any real way doesn't understand the banking system, because without U.S. banks and the U.S. dollar, you really can't do any sort of meaningful business with Iran. So there's that. They could, for public opinion, say we're staying in it, but they can't. So having said all that, crude oil rallied up. High 70s high, or high 71 high was like 71.89 or something like that. Brent shot up close to 78. And people were kind of wondering why, if there was this sort of 6-month waiting period and could things change and all that. It actually all can change. It doesn't have to be like this. Iran could back down, which I don't believe they will. But you're talking about somewhere in the range of 2 million barrels a day being at risk. Whether the sanctions ever get imposed or not, Iran also are already curtailed back their future production growth estimates. So currently they're doing about 4 million barrels a day. They were talking about doing 6 million by 2020. They now are saying 5 million because they're saying that foreign capital was needed to get to that, and the foreign capital is not going to be available to them. They won't be able to sell somewhere in the range of 2 to 2.4 million barrels on the open market. A lot of the rest of the barrels they use themselves, they sell to China. That'll probably still go. But it's a layered effect here, because if China continues to buy from Iran, which they did before and they probably still will, they probably won't increase it. They actually decreased the amount of barrels they were buying from Iran in December by about 16%. So that could complicate trade talks, which continue next week here in the U.S., between the U.S. and China. The last part of it is there's a possibility for the OPEC and non-OPEC production cut agreement to break down. A lot of people were out there saying that Saudi Arabia can make up those barrels. They can, and they can pretty quickly. But if they do, their allies in OPEC and then the Russians as well, who have all agreed to cut production, will be out there screaming, why do you guys get to overproduce? Why do you get to make up the Iran shortfall at these higher prices and fill your coffers? So I think everyone will pretty much start pumping full out if that happens. So my guess is it doesn't happen. So while we're pulling back today as we record this, unless something dramatic happens, and that can always change, I don't expect to see crude oil do anything but base and potentially go higher. And that's about it, just because the fundamental picture for it, especially going into the summer driving season, is still very bullish. That's my why and my crude oil segment.
Well, thank you.
You're welcome.
The Euro rallying.
It's rallying now, right?
Yeah, I'm actually watching. There's major overhead resistance about 120. We have the flat 200, and that's in the middle of the daily rotation zone. And then I'd be looking for another rotation back down to next key GAN levels lower, 117.50 and then 116.80.
Yeah, these death crosses, Mike, correct me if I'm wrong, the death crosses that I've looked at over the last 10 years, generally the move obviously is way before the death cross. You need a big down move for the 200 to turn above the 50. So obviously there's a huge move already, and the Euro's been going down essentially since about the end of January, I believe, or end of February. I don't have a chart in front of me. Anyway, but after the death cross is realized, we tend to get a rally up into the cross, and that can be a pretty big rally.
Yep.
So that's why people are like, oh, they don't work, because death crosses don't give you any sort of measured move. Mike gave you targets, but that's based off his regular analysis, not off of the death cross itself.
No, that's not off the death cross at all. That's just off of.
Right.
That's off of my crazy 8th harmonics.
Exactly.
For 80s hair metal bands, yeah, Death Cross was okay.
All right, we wrapping this up, guys, or we need to have anything left?
No, we're done. We are done.
Say goodnight, Gracie.
All right. Well, thanks for listening, everybody. I am Bob Iacchino.
And I'm Mike Arnold.
We'll talk to you guys next week. Thanks, Mike. Thanks, Stafford.
Bye for now.